Hi everyone, Josh Gilbert here and welcome to Stock Break, where I give an in-depth analysis on public companies in under 5 minutes, breaking down their fundamentals and potential valuation. So let's dive in. Hello everyone and welcome back to another episode of Stock Break with me, Josh Gilbert. Today we're going to be talking about a company whose products you might use every single morning. So would you invest in the company behind them? Today, we're going to be talking about Breville. It's the Aussie company that's become a global kitchen appliance powerhouse, and it's one of those businesses that is hidden in plain sight. It's not really flashy, but it's consistently innovative, global in scale, and it's laser focused on quality. So let's break it down. And if you're not already, make sure to hit subscribe to get all the latest episodes. And a quick reminder that before we get started, that this presentation is for educational purposes only. It should not be taken as investment advice or a recommendation to buy or sell any financial instruments. So on to Breville. It was founded in Sydney here in Australia in 1932. And back then it was more about radios. But if we fast forward to today, the company is a global force in small kitchen appliances. And as I said earlier, you've probably got one of their appliances in your house, but you may just not realize it. If you own a coffee machine, a blender, a toaster, or a food processor, there's a decent chance that it's going to be Breville. They actually sell in over 70 countries, and they also operate under a few different names. So if you're in the UK or Europe, you may have a product known as Sage. It also owns Baratza, which specializes in high-end coffee grinders, and Cambrook as well. That's its value tier brand. So it has two main revenue models. Global product. This makes up about 88% of revenue, and this is where Breville designs and essentially markets and sells its own branded products across the Americas, EMEA, and APAC. And this is revenue by Australian dollars over the last couple of years. And then it has distribution. This is about 12% of revenue. This segment distributes third-party brands like Nespresso in Australia and New Zealand. But what gets interesting for Breville, and the reason I wanted to bring this up, is that it's diving deep into at-home coffee. So really, we probably know Breville for its coffee machines. They've made two major acquisitions to become what we would believe now as this sort of one-stop shop for coffee. They've launched a coffee bean subscription service, so this is part of it. They've launched, it's called Beans. That actually grew at 71% in the first half of fiscal year 2025. So an area of the business that's performing very well. We know that coffee is continuing to grow. So it's no longer just about the machines. They want to give you the whole coffee experience, as you can see on the screen. But for Breville, its reputation comes from essentially pairing premium designs with smart functionality. Smart ovens, automated espresso machines, and it just looks great as well. It's a great product, and it's a quality product. So actually, Breville was the original inventor of the sandwich press. Well, that is up for debate, but they were the first to create what is known as the jaffle maker. So if you do love a good toasty, you've got Breville to thank for that. Look, it is a crowded space when it comes to competition. They're going up against KitchenAid, very, very high quality, well-known brand. Tefal, DeLonghi in the premium coffee segment as well. We've also got Shark Ninja. That's sort of really come into its own within the last couple of years, thanks to really being a bit of a TikTok darling. It has a product known as the Creamy. That sort of captured attention. But also it's going up against low-cost products as well. So I think Kmart or Amazon Basics, they are sort of eating into the lower end of the market as well. So look, the thing here for Breville, it's brand strength and innovation. They're key, and it needs to sort of keep pushing to stay ahead. On to some of its numbers. Look, might not be exciting at first glance, but the financials are still pretty decent. In the first half of the fiscal year, revenue rose 10% to just shy of $1 billion. Net profit after tax jumped 16% as well. That's a really important number, around about 100 million. Growth was solid across all regions. If we go back to that sort of chart, Americas and Europe, they're leading the charge. And coffee machines were the standout. That's sort of that reflecting that shift in consumer habits towards that sort of home barista experience. Gross margins, they were up at 36%. That really talks to the pricing power and the ability to manage costs, real competitive advantage today. Balance sheet, also healthy, generating strong cash flow. They carry minimal debt, and they recently just improved their dividend as well. The positive of having a strong balance sheet means it gives them flexibility to invest in research and development, expand into new regions, or return capital to shareholders through dividends. The slight risk, though, and that is tariffs. A lot of products, 90% of Breville's manufacturing is in China. The US and China, as we know, still uncertain. And what it's done is Breville pulled forward a lot of its inventory to the US to avoid that hit, which means that we don't believe that fiscal year 25 is going to have too much of an impact. Longer term, those tariffs could squeeze margins or force price hikes, But they are exploring and they have moved into supply chain diversification. There's still work to do, but we also think pricing power can come in here as well. So how is the stock getting on? Look, share price is down about 18% year to date. That's largely due to those tariff fears. But we think if Breville can sort of manage that risk, and history shows that it can, it was sort of managing that risk back in sort of 2018, 2019 when we last had that trade war. I think there's a lot of opportunity for long-term investors. They've got a healthy balance sheet, solid cash flows, a great research and development network, and it's scaling globally whilst actually maintaining its margins. And that's a great combination for long-term investors. Look, it's not cheap though. Despite the share price being down this year, it's still running at about 31 times forward earnings. That's above its 10-year average, and that's coming after a decent run after the last couple of years. A pretty poor run year to date, but a decent run up until that time. Given shares have sold off in the initial sort of China fear, analysts see upside though. They essentially believe that they can navigate what's ahead. Bloomberg has 5 buy ratings, 10 holds, and only 1 sell. But current prices from where we are today, it signals about a 14% upside. So analysts are still pretty positive. So look, I think it's understandable that investors would be cautious about about a brand like Breville, especially on the surface, given those sort of that manufacturing that we do have in China. But it's a premium and quality brand, which means that we think it can pass on almost all of that additional cost inflation from the tariffs to consumers, and we think that it can navigate its manufacturing pretty well, and we think that there may be plenty of room for China and US to negotiate. Look, as I say, it's done it before, and we think it can do it again. It is a quality stock that we believe it can navigate the next few years pretty well. Won't be plain sailing, but again, probably a company that you didn't realize was Australian, and they are growing segments of their business, especially in coffee, very, very well, and we believe that's a trend that's going to keep growing. Thanks for tuning in to Stock Break. Let me know in the comments what you think about Breville, and to stay updated on all things investing, make sure you follow us on all podcast platforms. Just search for Digest and Invest.